Okay, welcome to the 27th Wedding Online Sport Economics Seminar. We have today Stefan Szymanski, University of Michigan, who is presenting research. I'm afraid I've had some technical issues today, which means that I'm tuning in via a different device, and so I don't have Stefan's title to hand, but he's presenting, as he tells me, on the incidence of VAT on English football clubs back when the UK joined the European Union back in 1973. If you're taking part, if you can keep your microphones to mute, that would be ideal. Stefan has about an hour in which to speak, and then after that we've got about 30 minutes left over for a Q&A session. You're welcome to add questions in the chat should you want to. There's a chat feature that hopefully you can access. If you can't, you're welcome to hold those back until the Q&A session, or you can drop me an email as well. Despite my technical issues, I'm still able to access my email. But without any further delay, I'm going to hand over to Stefan to take away his talk.
Thank you, James. And can you see my screen now?
Yep, you can see that.
So there's my title for today, Tax Incidence in the Stadium, which is a little bit less dry than the title I gave earlier. So firstly, I'd like to thank everybody for coming along. It's incredibly flattering that you come to such a dull sounding talk in the first place. So thank you for that. The origin of this is that I worked for Her Majesty's Customs and Revenue as an expert witness on a court case about 5 years ago, and it had to do with golf clubs and charging VAT. So what had happened was the government had required golf clubs to charge VATs to people playing rounds of golf at their courses, and then the courts had said, no, that's a mistake, you shouldn't have required them to do that. At which point the golf club said, all right, well, we shouldn't have been charging VAT, but we did. So now you, the government, owe us the money back. You have to give it back to us. To which the government said, well, hang on a minute here. You pass this money, or you charge the VAT to people coming to your golf courses. So if we owe any money, we owe it to them. We don't owe it to you. But the golf club said, oh, no, that's not right. What actually happened was that we absorbed all of the tax, and we didn't pass any of it on to the people playing golf at our golf courses, and therefore you should give us the money back. And I was an expert witness for the government, arguing that that's not what would have happened, that actually the tax would have been passed on to the golfers. And so, which got me then to thinking about examples of where we might identify cases where a tax is imposed, and we can see who it was passed on to, and I had some data on football, which I'm going to share with you, and it struck me that the introduction of VAT in the UK in 1973 would be an incredibly good example. So that's the origin of this talk, and the reason that I think it's interesting for us is because it relates to a long-standing debate that we have had in the sports economics field about pricing at stadiums. So there are two very commonly held beliefs that are expressed in the literature, which are: one is that the team owners are local monopolists, and two, that the marginal cost of admitting an additional spectator is approximately zero, at least so long as there is excess capacity at the stadium. And there's a paper that is hopefully coming out in Jan van Oor's series of sports economics papers in The Economist, and I cite a lot of this research in there, but you can see here various statements about a local monopoly. In the US, it's kind of a no-brainer that it's a local monopoly, since there's franchise exclusivity within a number of miles. It might seem a little bit less obvious in the case of English football, since teams are often located very close to each other. But you can see here a couple of quotes from Peter Sloan all the way back in 1971, and Rob Simmons, supporting the view that generally we think of the sports teams as local monopolists. On the second one, again, it's quite easy to find sites in the literature for this, so I put up a few here. So they're not necessarily exactly equal to 0, but most of these say that it's at or around 0. So it's a pretty non-controversial position. And the reason that this is interesting is that it gives rise to the inelastic pricing puzzle. So there's also, this spawned a lot of research saying that, well, if under both of these assumptions and assuming profit maximization, then the price should be set at the point of unit elasticity on the demand curve, or if marginal cost is slightly above 0, then it should be set slightly into the elastic portion of the demand curve. And that's just not what the research finds. And there's been the sort of biggest summary paper is Villar and Guerrero, I think, where they looked at 82 different studies and 42 reported inelastic demand and very few reported results in the elastic section or unit elastic point of the demand curve, which is what you should expect under the two maintained assumptions. And so, as I think probably many people here are familiar, in fact, many people in what here are actually contributed to this literature, there's a lot written about trying to somehow explain away this result. So, with varying degrees of success. And so what I thought here is we have a new way of looking at this puzzle, because we also know that changes in taxation have significant implications for pricing. In particular, the UK introduced value-added tax, which is a form of ad valorem tax, on April the 1st, 1973, as part of the accession to the European Union. What a wonderful time that used to be. A great sense of nostalgia for many of us. And prior to this, there was no sales tax of any sort on tickets at football matches. So the question that I want to look at is how the football clubs responded to the introduction of this sales tax, and particularly how much, if any, of the tax did they pass on. So I'm going to look at that in theory. I'm going to then give you some evidence on what the clubs actually said themselves, and then I'm going to show you what they actually did. Okay, so let's start off with the theory. So what theory says is, well, this is, I expect at least to the extent that everyone watching this is an economist, then you're all very familiar with this basic diagram, which says that if you impose a sales tax or an ad valorem tax, then the effect of the tax depends on the relative elasticities of supply and demand. So that if demand is more elastic than supply, then the sellers will bear most of the tax, and if demand is less elastic than supply, then the buyers will pay most of the tax. And the broad conclusion, which most people can remember, is that the more inelastic side of the market is expected to bear the tax. However, this is a result for a perfectly competitive industry, and we've already said that we think that sports teams are local monopolists. So the monopoly story, we have to think through what will be the case in the monopoly story. And the monopoly story is, surprisingly, normally you think of the monopoly story as being somewhat simpler, but actually it turns out to be quite significantly more complicated, I think. And so here is some sort of simple algebra. I mean, of course, we know that the whole monopoly case is going to be setting marginal revenue to marginal cost. But whereas the supply curve is fixed in the perfectly competitive case, we know that there is no such thing as a supply curve in the monopoly case, and it really a lot of what happens in the monopoly case rests on the shape of the marginal cost curve. And indeed, so you can see in this formula, the price of the monopolist depends not just on the price elasticity of demand, which is true in the perfectly competitive case, but it also depends on the elasticity of the cost function, and so you can get quite different results depending on what that elasticity is. And in some cases, you can even get the result that more than 100% of the tax will be passed on to the consumers. And the way intuitively, if marginal costs are decreasing, not just average costs, but actually marginal costs are decreasing in the relevant range, then the tax will lead to a pass-through to consumers, and as marginal cost rises, that will also lead to an additional rise in price. So relative to the price without the tax, the price with the tax can be actually more than increased by more than the extent of the tax. So, just to give you a simple illustration, though, which we often find easier to deal with, is just take the linear demand curve case and a constant marginal cost case, and here it's quite straightforward to derive the results. And so on the left-hand side, I've done the algebra, and on the right-hand side, I've got the picture, so you can see how the story looks. And since James is going to post a recording of this on the web later, I'm not going to dwell on this for too long. You can go back and freeze the pane and check my algebra later if you want. But suffice to say that effectively what happens here is that the marginal revenue curve of the monopolist is being rotated by the tax. And so you can see the intercept of the marginal revenue curve on the y-axis drops. And that is what is causing, is going to determine the extent to which there is cost pass-through. And in this particular example, you can see that there is actually relatively limited cost pass-through. So we can do a little bit more with the algebra if we focus on pass-through. So one thing I've done here is define pass-through, and bear in mind that pass-through, what we mean by that is the difference between the price without the tax and with the tax expressed as a percentage of the difference between the price charged by the seller and received by the seller after the tax. So the seller has to pass on the sales tax to the tax authorities, and the question is what percentage of that is then passed on to the consumer in the form of a higher price. And in the monopoly case, we can show a couple of things. We can show that the pass-through with the linear case, with linear demand and constant marginal cost, the pass-through is always less than 100%. And we can also say that pass-through, it will be increasing in marginal cost. So the higher is the constant marginal cost we assume, the higher the level of pass-through would be. But that's not terribly helpful in the sense that those are rather restrictive assumptions. However, in the case where marginal cost is zero, which we've said is one of the main claims in the sports literature about pricing at stadiums, then we have a much more general case. And we know that if marginal cost is zero, then the profit maximizing choice of the monopolist actually just amounts to revenue maximization. And so the revenue maximizing monopolist chooses the price at the point of unit elasticity of the demand curve. That's something that was already been discussed a lot in the literature. But we also know that if you add an ad valorem tax, you rotate the marginal revenue curve, but the pivot of that rotation is actually where marginal revenue is equal to zero. And what that means is that the point where marginal revenue equals zero is exactly the same. The quantity and price where marginal revenue equals zero is exactly the same with the tax and without the tax. So which leads us to the conclusion that the profit maximizing price is unchanged in the face of an ad valorem sales tax. The monopolist absorbs 100% of the tax, and cost pass-through is zero, which is a very, very powerful result and does not depend at all. All you need for this is a downward sloping demand curve. So that's a very general result. And intuitively, the way to think about this is that when the price that maximizes the total revenue of the monopolist is exactly the same as the price that maximizes any percentage of that total revenue. So all that's happening is that the monopolist is being required to give a slice of the pie to the tax authority, and that it makes no sense for the monopolist to bake a smaller pie or a bigger pie in the face of the tax. The same size of the optimal size of the pie is unchanged, and therefore the price is unchanged, and which means that the monopolist absorbs 100% of the tax. Okay, so let's look then at some of the context of the adoption of. Well, that's the theory. So let's look at the context of the adoption of the AT on April the 1st in 1973. So English football was not in a great state back in those days. So what you can see here on the right-hand side a chart of attendance, which is in red, and the prices, which are the nominal prices are the dotted line, and the real prices are the unbroken line. And you can see here that attendance was mostly decreasing across the previous decade. You've got a bump there in the 66 and 67 seasons, which follows England winning the World Cup, which boosted attendance at club football in England. But apart from that, the situation was not particularly good. And almost every, real prices were being increased quite rapidly at almost 5% a year. And almost every club had significant excess capacity. So in fact, the average capacity utilization at games was 30% at this point. And only in the 1972-73 season, only 5 league games were played at full capacity. And this is the era when stadium safety and hooliganism are coming to be seen as serious problems. So there were a number of serious accidents at stadiums as a result of the stadiums being dilapidated. So parts of stands actually collapsing and fans being injured, which put people off. And then it was the rise of hooliganism. And I see Rob Simmons is here, so he'll remember back in the day. I remember this. You get up on a Saturday morning. You put your flared trousers on and your Dr. Martens. You go down the pub, have 5 pints of beer, then you go down to the stadium and look for trouble and beat anybody up. And I'm sure that's what Rob and I were doing back in the days. Well, maybe not. But in any case, this was certainly, there was a time when the newspaper. You look at the newspapers at the time, it's a constant talk about hooliganism, and it's actually the time. If you remember the film Clockwork Orange was released in, I think, in 1971, and in 1973 Stanley Kubrick withdrew the film from circulation in the UK, and it wasn't actually available to view in the UK until after he died, a couple of decades later. And the reason he withdrew it was because the film was seen to be actually being used by hooligans as an example of how to behave, and he was so distressed by the copycat hooliganism that he withdrew the film. So a second thing to say about the state of English football back then is that there was very little ancillary revenue being generated at the stadium. So this is an extract from the financial statement of Aston Villa, one of the biggest clubs at the time. And you can see here the total amount of gate money received and the total revenue. If you look at the 1973 column, which is the second column, you can see that at the bottom the total revenue for that season was £383,000, and out of that, almost all of that is ticket money. So if you look at each row, it's something related to ticket money. Apart from you've got £4,676 money from broadcasting, so they weren't getting much money there. But then also the items that I've circled, I've highlighted in red, are potentially ancillary revenues. So you've got rents, advertising revenue, and car park receipts. So really, the rents might be from concession stands and the car parking. Obviously, that's something that could be generated. But really, those ancillary revenues from fans, that wouldn't even be all of that, because you wouldn't count the advertising revenue there, I don't think. The profits on Villa News, so that was Villa News would have been the weekly program that the game program that they were producing. So they made some money on that, and then possibly some of the sundry income could relate to money generated from the stadium, although possibly from other sources. So you can see here that at best, these alternative sources of revenue were at best 10% of total revenue, and quite possibly quite substantially less. And this, if you look through the financial statements of clubs, and I have about 3/4 of all of the financial statements for English football clubs at this point in time, you can see from that data that all of these very few clubs are generating revenues from anything other than ticket sales. And that's of course important, because we know in the inelastic pricing literature, one of the key arguments has been that, well, you price on the inelastic part of the demand curve in order to bring fans into the stadium, because they spend money in the stadiums on ancillary activities like food, beverage, and so forth. And that's really not a significant contributor in the case of English football back in 1973. The other thing to say about the state of English football in 1973 is that the 1972-3 season itself was fairly disastrous in terms of attendance. So there was I cut out some comments from the newspapers, from the Times at the time, and even right at the beginning of the season, it becomes apparent that there's a crisis. And you can see the table on the right-hand side where I've put in the monthly attendance, and I've taken out season ticket holders. So you'll see in a minute that I have data on this. And you can see that in August, the first month of the season, gates were down by, non-season ticket holders were down by 8.5%. And then from September through to December, it's over 20% declines in each month. And there's sort of some slight recovery in January, February, and March, but still in March, they're 10% down on the previous season. And the newspapers were reporting this crisis, and the Football League was holding emergency meetings, and actually at the end of December comes up with a plan for a new look of football. Although it's important to say that these proposals were only going to be discussed in the summer at the end of the season. Nothing was going to be done during the season, and in fact, very little ended up being done anyway as a result of this initiative. So now I'm going to talk about what the clubs actually said they were going to do in terms of passing through, or to the extent to which they would pass through VAT. So how do I know what they said? Well, James, can people see my? Can you see me on camera as well? Is that my camera visible?
Yeah, I see you.
Oh.
Yeah, we can see you.
Okay, so what I'm holding up is I went out and bought a whole bunch of football programs from 1973, which you can get online. This is an example. This is the Manchester United program for the game on April 21st, 1973. And it's got lots of interesting facts about Manchester United and pictures of the teams and the games. But these programs also would tend to say what the club was planning to do in relation to VAT. And so I'm going to show you some extracts from these football club programs now. So, no, before I do that, I'm going to show you that in a minute. But first, this is what the government said. So with VAT coming in, the government posted advice for everybody in the newspapers about what to expect with this new tax. And you can see on the right-hand side, there's a full-page ad that they took out in the Times newspaper on April the 2nd. They'd run similar ads in March as well. And this ad actually gives you different categories of activities and tells you what kind of price increase you should expect. And so, interestingly, it has, I've highlighted the box there that says entertainments and eating out. And it says that admission to entertainments and sports would be expected to have a price. If the price was 60 pence before the introduction of VAT, it would go up by 5%, by 5 pence. So that implies an 85% cost pass through of the VAT. And the extract from the Times on the left is an extract from an article, not a government opinion, but actually a journalist writing about what would happen if prices went up by 10%. And you can see there, football match ticket goes from 40p to 44p. And so if that's 100% cost pass through. So this article was implying that that was the kind of price increase you might see, although it didn't actually say exactly that. But you can see here that people were being warned that prices would go up, and the apparent implication is that the tax would be passed on more or less in full to customers. So here is an article from a publication called League Football, which was the official journal of the Football League, and this journal would actually be inserted into football club programs at the stadium. So fans would, if they bought the program for their particular team, they'd also have this insert, and this would have various pieces of information. This is by far the driest insert that you would have seen in back in these days. Usually it was much more about football, but here is the secretary of Coventry City Football Club with an article on what he thought would happen when VAT was introduced. So this doesn't have a date, but I'm fairly sure this is in March of 1973, so the month before VAT is introduced. And the secretary seems absolutely adamant that there's going to be cost pass through. So I believe an inevitable increase in admission charges for next season. I cannot see any option open to clubs other than to raise prices. And so clearly, contradicting the theoretical model. So he's clearly doesn't believe they're zero marginal cost local monopolists. He thinks they're going to be passing through some of the costs. The other interesting note on this is that he says, I know many clubs have brought forward league games scheduled to be played in April to avoid the financial setbacks of the new tax, which is, I think, a kind of an interesting note as well there, which is fairly logical, actually, if you can bring forward the sale before the tax is imposed. That's clearly going to benefit producer and consumer. Okay, so that's what they said. Now here are some of the programs. So here is one program from Newport County Football Club, a very small football club, actually went bankrupt in 1990. But this is on April 14th, 1973, so 2 weeks after the introduction of VAT, and they say, in common with other league clubs, we regret we have found it necessary to increase our admission as shown below. And that is, there you have 100% cost pass through, at least for the field and for children. Notice there's clearly a discount for children. The increase in the stand is not quite as great, but most of the tickets would probably be sold in the field. And so you can see here, that's an example of full cost pass through. But it's actually the only example I found of a club saying that it was going to pass on 100% of VAT after April the 1st. Much more common was the following. That club said, well, let me read out what Swindon Town said on April the 14th. They said in their program, the dreaded VAT is now with us, and although I'm sure you will all appreciate that this 10% levy must be passed on to you, the directors have decided that as far as season tickets are concerned, there will be no further increase. Season tickets remain at this season's price for next year, plus only 10% VAT. So help the club by purchasing your tickets early. And then on April 24th, they said, Although it's necessary to pass on the 10% value-added tax to season ticket purchasers despite increased expenses, it has been decided not to increase the basic charge for season tickets. So there they're saying they're going to pass it on, but really this is related to next season. And then you have the statement from Arsenal on April 14th. This is a new tax that will apply to admission prices at this stadium. It must be realised, therefore, that admission prices will be higher next season. However, our supporters will be pleased to know that the directors have decided that the club will bear the burden of VAT for all matches at this stadium after April 1st until the end of the current season, as a consequence of which there will be no increases until next season. So basically, nothing, no pass-through now, but there will be pass-through at the beginning of the following season. Of course, by April 1st, most of the season is over, so there's relatively few games left to play. And you can see here a similar statement from Manchester United at the bottom about not passing on the VAT now, but passing it on at the beginning of the next season. And there are even some cases where clubs said, well, we might try not even to pass it on next season. So Crewe Alexandra on April the 7th, despite the introduction of VAT, there'll be no increase in prices for the remainder of this season, and every effort will be made to explore all avenues to prevent it happening next season, if at all possible, which is sort of hedging your bets, of course, somewhat. But nonetheless, you know, there's the possibility at least being expressed there that it won't be passed on. And then Shrewsbury Town, likewise on April 24th, saying that they're not raising the price of season tickets for the following season. Now, a lot of these programs don't say anything about VAT, or some of them say, mention the fact that VAT is being charged, but or that VAT is included in the price, but not exactly how much price is going to increase by. The big one there from Chelsea on April the 3rd is actually kind of an interesting one about the club shop, where they're saying that they're not going to pass on VAT on their stock in the club shop for the time being. And you can see, so your tea towel would still have been 50p until the end of the season. So another source of information on what clubs were going to do about VAT could be found in the financial statements. So the financial statements typically has a report of the directors or the chairman of the club, and I found two cases where those messages said something about VAT. And so what we have is here from Oxford United saying that they have absorbed. So these financial statements were published after the end of the season. Oxford United's statements published, the statements dated July 9th, and they said, well, we absorbed £1,200 worth of VAT on gate charges after April the 1st, but we're going to have to increase prices by 10% next season. And perhaps even more interesting is the statement from Oldham Athletic, which is dated October 31st. They say the imposition on football of VAT at 10% will cost the club £8,000 to £10,000 a year, but your board decided that ground charges should not be increased for the 1973-74 season, although all other clubs in the area have done so. We trust the public of Oldham will respond with their support and appreciation. So an interesting statement saying they're not passing through any of the costs, zero cost pass through. So they've been reading their economic theory, but apparently they're saying all the clubs around them have failed their economics degrees, and so they're not actually looking this up and they're passing through the VAT. So, and you can choose to believe that or not to believe that as you please. Okay, so that's what they said. So now let's move on to what they actually did. So how do I know what they did? Well, this is an amazing source of data from the National Football Museum Archive. So the National Football Museum Archive has the ledgers of the Football League going from 1925 to 1991. And for each season, for each club, they have a page like the one you can see copied here. This is Crewe Alexandra, and you can see every game in the season listed. You can see the attendance at the game, and you can see the gross take at the gate. You can see the amount paid out to the visitors. You can also see the number of season ticket holders on the left-hand side. And from 1973 onwards, you can see an extra column of VAT telling you exactly how much VAT was levied. So we can work out what was charged at each game for every team and how much VAT was paid. You might ask, why on earth does the Football League have this incredible data? Remember, this is all 92 clubs for a period of 65 years. The answer is the column labeled 4%. Throughout this period, there was a levy by the Football League on the gate revenue of clubs, which helped to defray the expenses of the Football League management. And so this is how they kept track of how much money was being paid to them. The clubs were obliged to provide this information to the Football League, and the Football League recorded this data in the ledgers. So it has all this detailed data. So I think it was Rob Simmons who discovered this this source, and this is about 10 years ago he discovered this, and then he and I and Tunde Buraimo were talking about this, and we wanted to try and do some research on this, and Tunde actually went off and then photographed all of these ledgers. So this is one of the photographs that Tunde took, but he photographed the entire set. And for the last decade, I've been trying to get all of this transcribed into Excel spreadsheets. And I hadn't realized how long this was going to take, but it's nearly done. And I've been getting students to do it. I've actually been paying some a data company in India to do some transcription. So it's nearly finished, but so it's a major record, and hopefully someday we'll just publish it on the web for everybody to access it. But what I've done for this paper is to just look at these ledgers for 3 seasons: the season in which VAT was introduced, the season before, and the season afterwards. So that's the data on which I can estimate the amount of cost pass-through of VAT in 1973. So here it is. Here's just a chart. So there are just over 6,000 games in the data. So you can see each dot on this chart is our estimate of the price. So we can't say we know exactly what the ticket price was, but we have an estimate of the ticket price, which is the gross revenue divided by the attendance after we net off the season ticket holders. Because of course the season ticket holders whose attendance we have the value for their attendance, they were not paying an entry price for that particular game, for any particular game. So we can work out, so that's our proxy of the average price paid to enter the stadium for each game. And you can see here, you can see the lines, vertical lines separating the 3 seasons. The red line, the red horizontal line, is the average monthly price in the data. And you can see the orange vertical line, that's the date of introduction of VAT. So what you can see, so 2 things to note about this. So firstly, obviously, the biggest jump is at the beginning of the season in both, or between seasons. And you can see that's in both cases here. We see this significant jump, a much bigger jump actually at the end of the 71-72 season than at the end of the 72-73 season. This prices back then were being set on an annual basis. They were not revising, generally speaking, they were not revising the ticket prices from week to week. So the reason that we see fluctuations in this monthly average must be to do with composition effects in the data. So if you think about what our gross revenue includes, it includes, well, you saw before in the case of Newport County, you could see that there were prices for the stands, there were prices for children, and there were prices for seating. And so all of these prices were different. And what you can see is what you'll probably see here, as you see fluctuations from month to month, are fluctuations in the composition of the crowds as between those three categories. And there were possibly other categories, possibly different prices depending where in the ground you sat. Although, again, nothing like the degree of price discrimination that you would see today. Pricing was much more uniform back in the 70s. And so you can see that our event, you can see a slight uptick in the average price after April 1st in our data. And so that's what we're going to look at in more detail now. So here you have the total attendance. This is across all of the clubs, the total attendance, the total number of season tickets, the gross revenue, the total VAT charged, and the number of games. And from that, we can calculate what the average price was based on our estimate of gross revenue divided by net attendance. Obviously, the sharp-eyed, you immediately notice that some VAT was actually being charged before April the 1st. This is presumably an error because they shouldn't have been charging VAT before April the 1st. It's actually a pretty negligible sum, and it doesn't change the calculation very significantly. It's difficult to say from the ledgers whether this was a mistake, actually that they charged the VAT and when not realizing that they shouldn't have, or perhaps it was a bookkeeping entry error as well. They mistakenly wrote down VAT when they put it in the wrong place. So it's hard to say, but both explanations are possible. In any case, the price through applying the pass-through formula, this data implies on average a pass-through of 18.1%. Now, of course, this is done by aggregating across all clubs, all divisions, and all games before April the 1st and after the April the 1st in the 1972-73 season. But what we could also do is look at the average price charged by each club and then take the difference in the average prices, the average club price, as our measure of pass-through. So the average club price before April the 1st was 38.8 pence. After April the 1st was 40.1 pence. And so on that calculation, we get a pass-through of 35.7%, so somewhat higher. So what we're seeing here is some cost pass-through, but nothing like 100% cost pass-through. So, which is, if you like, closer to the zero marginal cost monopoly story, but not exactly the same as the zero marginal cost monopoly story. So before going further, you might say, well, given that you've got these, you've got some variations in your estimate of price because of composition effects, can we really say that these price changes are significant? So one way to think about that is to calculate the percentage change in price for each team by season game, comparing the 72-3 season with the previous season. So each team played either 21 games in the top two divisions, home games in the top two divisions, or 23 home games in the lower two divisions. So you can label each game from 1 to 23 and then compare what was the percentage price change between seasons for each game. And so one thing we can see here that the mean percentage change before April the 1st was just over 26%, and the mean percentage change after April the 1st was almost 31%. So almost a 5% increase, higher prices after April the 1st, and that's statistically significant. So we can be confident that there were some price increases being increased after April the 1st, and these seem specifically related to the imposition of VAT. And this 5% difference between the two seasons, that translates into a cost pass-through of 42%. So a somewhat higher figure than the one that we were just looking at. Now, one thing obviously to do is to think about the extent of cost pass-through depending on which division. Clearly, you'd think that the top division demand would possibly be much more inelastic, and therefore you might think that the opportunity to pass through the tax would be considered to be higher in that division. Not that, of course, the theory says zero cost pass-through, but allowing that might not have been the guiding principle of the decision makers. We can see here that there is some variation between divisions, but not very much. So in the top division, we see a cost pass-through of 38%. In the second division, it's 21%, and actually it's somewhat higher than that in the third and fourth divisions at really around 30% for those two. And so the overall average of 30, 35, 36% is actually not too different depending on which division you look at. Now, another way to pass this is to actually think about how many games did each club have left at the end of the season, because we are near the end of the season, so clubs didn't necessarily have many home games left to play. I mean, clearly, so this is really, of course, it's only the home games that are going to be relevant here. So clubs had between 2 and 5 home games left to play after April the 1st, and we can see that the appears to increase the more home games you have left. So pass-through was only 20% for teams that had 2 games left, but for the 8 clubs which had 5 games left, our cost pass-through estimate is 82%. So that seems to be significantly more. And I suppose one might argue that those clubs had much more at stake in terms of passing through cost than teams which had relatively few games left. One possibility here is that some of the clubs with 5 games left were the stronger teams that, for example, had been playing competition in Europe and therefore were postponing regular season games until the end of the season. So it may well be that that reflects the position of some of the stronger, more popular teams as well. Okay, so that was passed through from April 1st to the end of that season. What about the beginning of the next season? So the 72-3 season ended on May 15th, and the following season started on August 12th, so 3 months later. So what happened to prices in the following season? Well, you can see as a comparison, the average price, if the average price in the 72-3 season was 42 pence, the average price in the following season was 46.4 pence. So that looks like roughly a 10% increase. So you might be tempted to argue that here is evidence of 100% cost pass-through of VAT in the following season. However, you also have to take into account that this was an era of relatively rapid inflation. So the retail price index between August 72 and August 73 had increased by 8.9%. And given that pricing changed really once a year, the relevant comparison for the clubs would have been the price level in August 72. And if they were just simply to keep track with inflation, they would have needed to increase prices by around 9%. And in fact, what we see is then that the real price increase in August 1973, after allowing for inflation, was actually 2.6%. And remember, I said earlier on that prices had been rising at an average annual rate of nearly 5% for the previous decade. So this was a much lower real price increase than we'd seen for a while. Now, this could be partly to do with the fact, or almost certainly to do with the fact that the 72-3 season had been a disastrous season for attendance. But it also suggests that if we consider the real price increase, then the amount of cost passed through was much lower. And so we can see here that I've put in red the the estimated price increase pass-through based on the inflation-adjusted prices, and it depends which game you look at, the first game of the season, or subsequent games or the whole season. But if we look at the entire season, the implied cost pass-through is about 18%, which you remember that was the implied cost pass-through that we found for when we looked at the data in aggregate in between April 1st and the end of the 72-3 season. So there seems to be some consistency. So it seems to be that there's limited cost pass-through, some cost pass-through, not exactly zero, which the theory predicts, but possibly a relatively low level of cost pass-through, suggesting that most of the VAT was being absorbed by the clubs. I showed you, because I was showing you what the clubs were saying they would do in their programs. It's interesting to look at what happened in the following season to those, well, both after April the 1st and in the following season to those clubs we were looking at. So remember, Newport County said that they were going to pass on 100% of the tax. Well, actually, if you look at the average prices at Newport County after the tax was imposed, it looks like they actually passed through 195% of the tax. So they actually increased prices much more significantly. But when we look at the following season, their pass-through was more like 56%. If we look at the clubs that said they would wait until the following season, you can see actually that the prices, the implied pass-through for most of these teams is actually negative. Their prices were going down at the end of the season. And so there's certainly reason to believe that they were absorbing all of the VAT. These clubs were absorbing all of the VAT at least until the end of the season. And if we look at the following season, well, it seems like there's some variation depending on what happened to the team in the following season. So Arsenal appears to, on an inflation-adjusted basis, to pass through the entirety of the VAT. But Manchester United actually have a negative pass-through in the following season. But it's also important to remember that that season, that 73-4 season, was a disastrous season for Manchester United. It was actually the season they were relegated to the second division. And so they seem to have a negative pass-through. And you can certainly see we have Shrewsbury Town relegated, and we have Crewe Alexandra, who required re-election at the bottom of the fourth division. These are the teams with apparently negative cost pass-through. These are the teams that were struggling in the following season. And we see sort of varying pass-through rates. Oldham Athletic, who said, remember, they said no pass-through at all. Oddly, they seem to be 29% cost pass-through after April 1st until the end of the season. But in the following season, they seem to have been good to their word. The implied cost pass-through is just 3%. So that's probably fair to assume that that was zero, and they did not pass the VAT on as they said they would, as they said they wouldn't. Yeah. The last sort of bit of the puzzle to look at is, you might have been asking yourself, well, what happened to attendance? Was it to the extent that prices were being raised and that there was limited cost pass-through, was it affecting attendance, at least in the 72-3 season? And the answer is actually no. If anything, April and May saw lower attendance than the previous season, but the fall was actually smaller than we saw in the months of, well, in any of the previous months, and actually much smaller than we saw in, say, December. So it doesn't seem that this had very much of an effect on attendance. Attendance was falling dramatically for other reasons, and it doesn't look like the limited extent of cost pass-through had an effect. But you can see the effect that, remember, the Eddie Plumley, the Secretary of Coventry City, was saying that teams were bringing games forward to play them before the introduction of VAT? Well, that certainly does appear to be true in this data. In the 71-2 season, there were 399 games played in April and May, but in the 72-3 season, there were only 290, so 109 fewer games played in the last 2 months of the season, which, and you can see here that there were significantly more games played in March and in February of 1972-3 than in 1971-2. So it does seem like teams brought forward games in order to avoid the tax. And just in case anybody's thinking, well, maybe the seasons run over different periods, actually the two seasons, the start and end dates for those two seasons are almost identical. So it wasn't a change, there wasn't a broader change. It does seem like teams brought forward games in order to avoid paying the tax. And if they were absorbing the tax themselves to the large extent, then that would make some sense. So here's my conclusion on the pass-through is that it seems to me that the pass-through looks as if, and one thing that strikes you is you can't say anything particularly conclusive about this. We've got impressions about this. Clearly, a lot of things that people were saying were not true about having to pass on the tax. It seems that there was some pass-through, and if we had to take an average, it would look like it would be somewhere in the region of 25%. So it's not consistent with zero cost pass-through. It's certainly not consistent with 100% cost pass-through. And arguably, we could say that this is much closer to the theoretical zero value than anything like 100% cost pass-through. So I'd be interested to hear what other people have to say. We should have a vote, actually, whether this supports the theory or rejects the theory at the end. But my thought is that there is some modest support, although it is modest support for the theory. So here's what I think actually happened, though. So in reality, I think you need to think about this in terms of the way people make decisions. And so what happens is sometime in March or April, the club directors would have met to talk about what they were going to do about VAT. And you can imagine a meeting of the board of directors, and they're arguing about this. And some say, well, we have to pass this on to the clubs. We can't afford to absorb this tax. Well, we'll go bankrupt. And then others are going to say, well, we can't afford to pass it on to the fans. We're losing so many fans already. We'll just lose more. We can't afford to do this. And so the back and forth arguments are going to result with a board of directors. It's going to result not with taking one of the two extremes, but actually with something in the middle. There's going to be some compromise decision which is made. And it strikes me that that's where most of these clubs probably met somewhere with a compromise of around 25% as a way of finding a middle ground between opposing camps. So if we really wanted to know, probably the best place to find out would be the minutes of the meetings of the board of directors. So what I'm hoping is some sports historians will someday go and try and find the minutes of these meetings, which would be pretty tricky. Many of these, as you know, many of these limited companies have actually disappeared since then. There are successor clubs controlled by new companies. So we don't even know if there are archives where these board minutes are kept. And it may be that board minutes are not terribly informative. So I think that's the answer as to how we would know, but it may well be that we'll never really be able to discover what happened. All right, so that's what I have to say.
Okay, thank you very much, Steph, for a fascinating talk. As Carl's mentioned in the comments, I'm delighted that my own team were true to their word and didn't pass on pass through the tax. But in terms
while
of
slandering all the other teams.
Yeah, exactly. Great strategy. I mean, I guess one thing to say is, of course, there's a lot of teams in Greater Manchester, but it implies something odd about the mindset of what they thought about their fans, that their fans might somehow go to one of the other teams, Bury or Stockport or United or City instead. But anyway, I'm stepping in the way of Rob, who's straight away put his hand up. So Rob, go ahead.
Oh, let me. Am I unmuted? Right.
Yep.
Okay, thanks, Stefan. That's a great talk, and it's splendid that the National Football Museum ledgers have been given an interesting application there. Yes, I do recall the 1970s, and one of the things that, this is a really turbulent period that you're dealing with, and you're focusing in 1972-3. So this is just before the oil crisis, winter of discontent, strikes, fuel shortages, power cuts, even all of that stuff, which the clubs wouldn't have known about, but they would have known about inflation. And you rightly pointed out the 7-9%. But I'd go a bit further. I'm wondering if your figures are a bit of an underestimate there, because petrol prices were rising faster. And petrol would have been a very high proportion of expenditure in the household budget at that time, far more than now. So I'm wondering if travel costs could be brought into the picture here. And I'm recalling the work I did with David Forrest, which sort of tried to reconcile the inelastic pricing puzzle by bringing travel costs in, to the cost of attending games. So I wonder if that tweak would make any difference to your results.
Yeah, that's a great thought, and I did think about this a lot. And because again, you and I remember this, right? We're old enough to remember what this was like. I mean, this was a terrible time to live in the UK. I mean, it was just absolutely appalling. Everything was awful. But in terms of the oil prices rises, the oil price increases didn't start until after the Yom Kippur War, which was in October 1973. So in that case, you wouldn't have seen any effect either between April the 1st and the end of the season on May 15th, or in the prices fixed at the beginning of August of the 73-74 season. One thing, though, I think is that what's striking is that no adjustments were being made in the 73-4 season after those events, even though, as you say, as we get into 1974, we go to the 3-day week. Do you remember the 3-day week? So again, we had hurricane lamps in my house. I remember this. We were living off paraffin and whatever blankets, and it was just and praying for the best. It was just an absolutely appalling state of the world. And yet none of that seemed to feed into the ticket pricing of the football clubs in 73-4. So I do think that's striking, but I don't think it has any particular implications for the VAT story. Thanks. Were you going out and beating people up at stadiums, Rob, as well? Did you have long hair? And did you wear
yeah, I actually did, but amazing to see now. But my main problem with going to football in the 70s was that I'd be stuck behind tall guys like yourself, Stefan, and I couldn't see the game too well. So later on, when All-Seater Stadium appeared, that was far better for my experience.
But that's what the Doc Martens were for, so you could kick the person in front of you and get them out of the way, right?
Didn't have those, though.
Okay, so Jorge is, I think, asked us a similar kind of question in the chat. He's saying, in terms of the effects of attendance, it may be important to think about relative prices. Other goods make larger, smaller VAT pass-through. Would it have a differential effect? I guess the question is, has much research been done onto the broader pass-through in other areas of the economy with the introduction of VAT in the 70s?
There's very little research on the impact of VAT, and partly I think that has to do, again, goes back to Rob's point really, which is because it's such a turbulent point in history, actually drawing conclusions about other products other product markets is very difficult. So bear in mind, I hope this is sort of paper Ignacio Palacio Suerta would like, because here we have something where in football we get this weekly update, so we can see what's happening to prices at a very fine-grained level, which is not true for most price series that you can think of. Most price series are at best monthly. And then there's going to be a lot of noise. There's a lot of issues about collection. Do you have consistency? I mean, again, here we have complete consistency. It's the same 92 teams. There's not any argument about whose prices we're charging. So the answer is no, there's not very much written about what happened to VAT, but partly that's a reflection of the turbulent economic environment of the time.
I was also intrigued by the stark changes in prices at the end of the season for some of these teams. Now, you're obviously getting the average price rather than actual prices. I mean, was it the case that so Arsenal would have put up a new board with a new price at the end of the season because because they weren't doing very well or something, or is it different composition of fans, different places in the stadium that they went to? Because presumably kids would have paid less, would have paid concessions. If you stood in the paddock, the terraces, you would have paid less than if you were in the posh seats. I know that to what extent that has a difference in the average price that you backed out from the gate receipts data.
Yeah, so I mean, I can say there's this composition effect of this price estimate, which is, which I say, I mean, one thing I think is that the composition effect is not that important in the sense that if there was really a lot of variation from month to month, then the small percentage price increase that is associated with VAT and introduction of VAT on April the 1st would not show up. It would just be swamped. And yet that t-test was very significant. I mean, it was not, there was no doubt that there was a price jump, even though it was relatively small. So yeah, I think part of the thing is, as economists, we like to think that these are rational decision makers making optimizing decisions. That I'm not totally, my reading of the history of management of football clubs in England does not persuade me that that's a very strongly supported hypothesis in the data. Shall I put it that way? And what I think is what this shows is also, I mean, we then say, well, okay, we know that people aren't necessarily behaving fully rationally, but the market will drive people to rational choices because through trial and error. And I think that's much more likely is that they realize that, for example, with cost pass-through, that they really had little choice but to absorb the tax because of potential, because they knew it would affect demand and they knew that would just make them even worse off. So I think it may be that they sort of iterated towards that. And there were clearly differing opinions. I think some did pass it all through, some didn't. It varied.
Yeah, I guess I'm just wondering also about kind of the whole menu costs kind of idea, that there must have been a price posted somewhere for the turnstiles. I mean, when I was young, I'm not, my youth was the late 80s, early 90s, but you still have a price above the turnstile. So, I mean, presumably there was a price above the turnstile in the 70s as well that you paid when you went in.
Yeah, I mean, I would have. So I'm trying to think. Rob might have an idea, but I mean, I think there would have been. You would have had a ticket office where you would have lined up to buy your ticket, and that would have had a board probably above it in big letters saying what the prices admissions were, and they would have said basically stands X, children X, and seating X, and that probably would have been it. Do you think, Rob? That's my sense of what it would have been. Yeah, you're muted.
Yeah, that's correct, Stefan. Of course, entries by turnstile, but the board of prices would be in front of the turnstile.
Did you pay at the turnstile, or did you pay? All right, okay. So they're taking the money.
Any more questions? Or Rod, you got your hand up, so yeah, just spotted that.
Oh, well, thanks. Thanks, Steph. It was fun. I just have to ask. So, what do they do with the value-added tax revenues in the golf case?
Well, all right. So, what should have happened was, so here's the thing. So people might want to, if they're not interested in the golf case, they might want to drop off this call now. But here's the thing. What the evidence of the experts for the golf clubs was that their market was highly competitive, that they operated in an extremely competitive market when charging these fees. So I said, well, okay, if it's an extremely competitive market, then the theory of perfect competition applies. The more inelastic side of the market is going to pay. You have excess capacity, so you have elastic supply. Golf demand is likely to be relatively inelastic, so you would have passed on the tax to the consumers. At which point, their experts changed their evidence and said, "Oh no, we're not really very competitive. No, we're really monopolists. We have monopoly power." And so at that point, of course, the tribunal should have said, "Well, okay, we're going to listen to we're going to take you at your word that you're competitive, and we're going to listen to the tax expert who says you would have put the theory says pass it on, and you don't get any of the money back."
Okay.
No, but sadly, that's not what happened. The tribunal decided that actually their expert was right, and forced the HMRC to hand back 95% of the VAT. And it was interesting, they said 95%, not 100%. And basically the 5% covered the costs of the government in bringing the case. That was what happened in that case.
Interesting.
This
well, I mean, especially if you think, well, I mean, if you think about the results of your work on soccer, right, then even that wasn't the correct outcome, right? I mean, if they did have market power, and then the tribunal acted in a sense incorrectly. They didn't have the benefit of your work, but they.
Well, if their side had said, if the golf clubs had said, yes, we're local monopolists, and on the theory of with zero marginal costs, we pass through 100% of tax, that's a coherent theoretical position to adopt. But they adopted simultaneously the position that they were operating in a highly competitive market and that they were passing on 0%.
I see. Yeah. Thank you. Just my curiosity.
That was an interesting case.
Okay, any more questions? I struggle to see hands raised because I'm unfortunately using an iPad rather than my usual laptop.
Oh, I might be able to. Oh no, I can't see hands raised.
Well, Rod still has his, but maybe he's asked his question. Unless you have another question, Rod. No. Oh, Ian. Hand up, spot that one.
Hi, Stefan. I was just wondering, from a theory point of view, whether externalities come into play at all, because if I'm going to the football with Rob, that's a much better experience than if I just go on my own to an empty stadium. But if the stadium's full, then I want people in the ground, right? I want an atmosphere. So did that factor into the decision making with pass through? Did you see that varying with attendance? So if you had relatively low attendance, do you end up passing through less? If you're near a capacity, do you end up passing through more? Were you able to have a look at that?
Well, that's a great question, and I mean, part of the puzzle of this data is, one reason why I'm focusing specifically on cost pass-through, just really thinking about what the clubs were doing, is that, you would hope that this would be a really good way of calculating an elasticity for a price elasticity of demand. And the answer is it's hopeless. It's completely hopeless. As I showed you, there was actually evidence that attendance was actually, the trend of attendance was actually rising in the last 2 months of the season relative to the previous season. The declines were not as large as they had been in the months when there was no VAT. So so the ability to infer anything about attendance behaviour in this data is really hard, which suggests that probably, I mean, my sense is probably demand is likely to be pretty inelastic at these levels. I mean, remember, these prices are by, very low by this, even by the standards of the time. It was pretty cheap to go to a football match. I mean, one of the reasons why hooliganism in the 70s was such a problem was that every young hooligan could afford to go. You didn't have to have any money to go. And, one of the things that killed off hooliganism in England was price rises, and only old people could afford to go.
Yeah, I did see that it cost only twice as much as laundry liquid in your list of prices there. So, yeah.
Yeah, I mean, it was phenomenally cheap. Well, if inflation adjusted, it actually amounts to an average of £5.
Right.
And if you think of that, and that's an average across all the divisions. So if you think about that, that's for the lower divisions, it's more like the equivalent of £1 or £2 today. And imagine you could go to watch football for £1 or £2, then that would change the composition of the audience. So so the answer to your question is, I mean, then it's really hard to capture any demand effects at all in this data. And I think, it's going to be interesting when we start to look at the data on a longer period, when we look at more years, and then I think we might be able to say a bit more when we've got that extended period. But in this period, I didn't come up with anything very much, I'm afraid.
Okay,
good question.
Thanks.
Thanks, Ian. Any more questions or comments?
Matt, I've seen a question in the chat that Carl asked about when clubs started sharing FA Cup gate receipts. That goes back to the 1872, I think. I mean, they always shared gate receipts. That was something that was.
Is it always half and half, or?
I think so. Yeah, I think right back at the beginning. I mean, it's a very old fact, a very old tradition. I mean, when in 1888, when they founded the Football League, William McGregor, who's commonly described as the founder of the league, he actually advocated for equal sharing of all league games, and was voted down by the other clubs. Actually.
Your question about the board minutes made me think of the Everton collection online, which is this archive where they've digitized a lot of the information and put it online. But I had a quick check, and I think unfortunately the minutes of the board only go up to about the 1960s, so I think just short of anything new or VAT passed through.
I mean, it would be really, really hard to do that research, and it would be a great PhD. At least I would think it would be a great PhD. I'm not sure it's necessarily good for your career to do a PhD on something as arcane as this, sadly.
And also your discussion of the general economic situation made me think that there must have been, perhaps it's been curtailed by the lack of the macro data, but you imagine that, 3-day week even, and all these other tumultuous events in the 1970s, and you might be able to trace those to explain those patterns in attendance. You have quite an impressive level of variation in that 10-year period that you showed at the start.
Yeah. No, I mean, there's going to be a lot of variation, and you'll certainly be able to test a whole bunch of hypotheses about things. I mean, the problem is going to be there are too many things that could possibly have an impact, right? I mean, it's there's a lot of potential factors, right? So how do you narrow it down is going to be a problem.
I guess you at least have average prices now that you wouldn't have had before. Now that you're putting this ledger into the public arena, I think is that a hand? Is that Ian's hand gone back up, or is that still Ian's hand from before? we go. Okay. Trying to quickly check the chat. Maybe you can see it better than I can, Stefan. But I think, are there any final questions, comments anybody has they want to raise or mute themselves, contribute? Well, assuming not, then it just remains to once again thank the speaker. Thank you, Stefan. Really, really interesting, absorbing talk. Doing what we should be doing as sports economists, which is doing the economics and using the sport as the application, applying the economic theory and allowing the dirty data to tell us whether or not our theories are upheld or not. So thank you very much, Stefan. Thank you for the comments. And next week, October the 9th, we return with Daniel Weimar of the University of Duisburg-Essen, presenting on a bright spot for a small league social media performance in a football league without a COVID-19 lockdown. So back to COVID-19 next week. And in the meantime, thank you all once again for your contributions. Thank you, Stefan. And we'll look forward to seeing you again next week.
Thank you.